Today, I'd like to present to you the collapse of FTX, a prominent cryptocurrency exchange that recently made headlines. FTX was founded in 2019 by Sam Bankman-Fried, who had previously co-founded Alameda Research, a cryptocurrency hedge fund with Gary Wang. Since its inception, FTX has achieved remarkable growth, becoming the world's third-largest centralized cryptocurrency exchange by July 2021. The platform offers a wide range of trading products, including derivatives, options, volatility products, and leveraged tokens. Users can trade digital currencies for traditional money or other digital currencies, providing flexibility and convenience in their transactions. Unfortunately, the leadership at FTX played a significant role in the company's downfall. The director of engineering, Nisha Singh, developed a software code that enabled Alameda Research to discreetly borrow large sums of customers' accounts without limits. This unethical practice raised concerns and damaged the company's reputation. John J. Reid III, who assumed leadership after the bankruptcy filing. FTX's business model revolves around facilitating the trading and liquidity of various coins and tokens. It caters to both retail and institutional traders through its mobile trading app, allowing transactions in futures, options, leveraged tokens, fiat currencies, cryptocurrencies, and NFTs. The platform generates revenue through trading fees, NFT fees, interest from margin borrowers, and fees from merchants accepting cryptocurrency as payment. FTX has experienced significant financial success. In 2020, the company recorded a net income of $70 million, which skyrocketed to $388 million in 2021, representing a growth rate of over 2,000%. The platform's peak 24 hours trading volume surged from $7 billion to $21 billion in 2021, indicating the growth, popularity, and adoption of FTX among cryptocurrency traders and investors. However, despite the impressive financial performance, FTX faced a major setback when it filed for bankruptcy on November 11, 2022. The company experienced a surge of customers' withdrawal and its insufficient assets in reserve, particularly as many of its reserves were held in its own token FTT. These unfortunate turns of events significantly impact FTX's financial standing and overall performance. In recent news, FTX faced a series of controversies. The CEO of Binance, Changpeng Zhao, announced the sales of FTT tokens due to concerns about FTX's financial stability. This announcement caused a decline in FTT's price and led to a mass withdrawal of fearful traders, resulting in a significant shortfall of $8 billion. FTX filed for bankruptcy protections and Bankman-Fried resigned as the CEO. Furthermore, unauthorized transactions resulted in at least $1 billion of missing customers' funds, leading to legal charges against Bankman-Fried. He was then arrested in Bahamas.
The causes of FTX insolvency and declared bankruptcy following a series of events. It began on November 2, 2022, when a cryptocurrency news website revealed that a quantitative trading firm owned by Bankman-Fried, FTX founder, had a $5 billion position in FTT, the native token of FTX. This raised concerns about unreported leverage in Bankman-Fried's companies and triggered a chain of negative impacts on the financial market, particularly the cryptocurrency markets. There are several key factors that contributed to FTX's current situations. Firstly, FTT, the utility token created by FTX, was considered a Ponzi-type token. It lacked backing by any other asset and failed to meet investor expectations, as it did not provide access to platform income, ownership stake, or government influence. This led to a class action lawsuit against FTX and its celebrity backers, alleging misappropriations of assets and improper handling of client funds. Secondly, FTX's excessive leverage played a significant role. The company relied heavily on debt, using FTT as collateral to raise substantial funds in the cryptocurrency markets. This resulted in a high debt-to-capital ratios and increased financial risk for FTX. Lastly, there were issues of diversion and misuse of investors' funds. FTX and related companies held a majority of FTT coins, allowing them to manipulate its price and control the markets. It was revealed that FTX CEO Bankman-Fried diverted billions of dollars from FTX to other ventures, such as Alameda Trading, political donations, and luxury property purchases. This misuse of funds eroded investors' confidence, leading to significant withdrawals and liquidity risks for FTX. So, overall, the combinations of FTT as a Ponzi type token, excessive leverage, and diversions of funds contributed to FTX crisis and eventual bankruptcy. The impact was felt across the financial market, particularly the cryptocurrency sectors. Next, liquidity risk, which was the main risk present during FTX collapse, exposed FTX to bankruptcy. Typically arises when a financial institution creditors, such as depositors, abruptly demand immediate cash by asking withdrawals of their funds due to lack of confidence in those institutions. This scenario leads to a rise in the cost of financing and limits the amount of cash that financial institutions can store. Third, to cover the abnormally large cash withdrawals, financial institutions must either borrow extra funds from other institutions or sell their assets immediately for much less than their fair market value, and even sell them at prices that are much lower. Hence, the financial institution's future profitability and solvency may be in jeopardy due to this increased liquidity risk. Thank you.
Moving on to the risks of current crisis and troubles. The collapse of FTX was triggered by a liquidity risk primarily caused by the company's significant holding in its native token, FTT, which lacked backing from any forms of assets. This situation made FTX financially vulnerable. Additionally, FTX had inadequate cash reserves, increasing its risk of being unable to meet short-term obligations and creating a need to quickly sell off its native coin, FTT tokens. As negative news about FTX emerged in the market, panics ensued, leading to a wave of withdrawals by FTX users. This sudden outflow of liquidity, combined with FTX's inability to process the withdrawals, ultimately led to the firm's insolvency. And as a result, FTX was compelled to file for Chapter 11 bankruptcy protection. The collapse of FTX as the second largest cryptocurrency exchange by volume also poses a systemic risk to the cryptocurrency market. The event had a significant impact on investors' confidence, leading to substantial declines in major cryptocurrencies such as Bitcoin and also Ethereum. These crises, the FTX crisis, resulted in a quarter and 25% decrease in the overall market value of the cryptocurrency industry. The repercussion of FTX collapse caused increased volatility and uncertainty within the market, further jeopardizing its stability in the future. As for the leadership effectiveness, Sam Bankman-Fried, a prominent figure in the cryptocurrency industry, experienced a significant tarnishing of his reputation due to his involvement in fraudulent activities while serving as CEO of FTX. This discovery of events was due to the fact that the collapse of FTX was evident. And these events eventually led to his resignation from his position as CEO. Consequently, there was a surge in customers' requests for fund withdrawals. And this can be attributed into two phases of leadership effectiveness. The first being leadership issues during SBF's tenure as CEO. And also the second phase, which is the subsequent management of the crisis by John J. Ray III. FTX failure was not a coincidence at all, but rather a consequence of ineffective internal leadership. During the crisis, it was revealed that the CEO SBF had illegally transferred billions of dollars of users' funds from FTX to his sister trading company, Alameda Research. This was caused by the leader's insatiable need to leverage its own coins, FTT. And all of this has demonstrated SBF's leadership disregard for legality in both entities. Initially, SBF had denied any wrongdoings and blamed market conditions for the crisis that FTX was facing. This has highlighted his ineffective leadership in FTX. And under SBF, FTX lacked internal accountability and transparency in its governance system, impeding external investors from accessing crucial information in its financial statements. The absence of a strong board of directors also further obscured legal and financial connections from external auditors. These leadership failures under SBF significantly contributed to the future FTX collapse and crisis. Moving on to the second phase, which was spearheaded by John J. Ray III, which is the new CEO of the FTX that was appointed. He had orchestrated a remarkable turnover for the company. After a crisis and bankruptcy, he released a comprehensive interim report addressing the issues and taking prompt actions on the issues that FTX was facing. He attributed the downfall of FTX in his report to the inexperienced leadership and promptly informed investors and third parties, diverging from the previous leadership denial of wrongdoings. And under his guidance, FTX implemented a robust system by appointing qualified professionals to the board of directors, ensuring a solid foundation for the company's recovery, which was opposite from whatever the previous leadership under SBF was doing. This demonstrates the power of transparency, accountability, and also effective governance in restoring trust in the financial institution.
After evaluating the causes and reasons of FTX's eventual downfall and collapse, we're going to go through the recommendations on how they could have improved on its company's weaknesses and vulnerabilities. First of all, they should have used solid assets over cryptocurrency when it came to collateral. Solid assets actually provide stability for the firm, and solid assets such as real estate actually hold intrinsic value and are less volatile compared to cryptocurrency tokens such as the FTT token in this case. Nextly, FTX should have implemented a capable board of directors. Now, FTX suffered too much power and authority in the hands of one person, which was Sam Bankman-Fried, and they had an inadequate board of directors that left this rampaging CEO unsupervised and did not seek for any clarification on important issues. Having an effective board of directors would not only create effective risk management, but effective governance and would have monitored the leverage and use of funds as well. Now, on the evaluation of these two recommendations that I gave, the benefits of using solid assets as a collateral will be that it reduces risk for investors when they are borrowing the FTT token, and it allows FTX to have a fallback in the case of a market swing event as well. However, the risk carried by using solid assets as a collateral will be that it is often illiquid and that it will be hard to turn into cash over time. When there's a sudden case of market swings or a market default event or sudden case of withdrawals, having solid assets will pose a problem and would, for the collateral of these investors. Now, the benefits for having a capable board of directors would be they would have implementation of policies, implementation of interior control, they would have sorted out legal issues, and they would have financial regulations such as regular audits within the company. This would have allowed FTX to build its reputation further and give investor confidence in the company. However, a competent board of directors does not guarantee effective communication 100% of the time. There may be times where there's conflicts of interest and communication issues that would hinder effective decision-making and stun the growth of the company in that period of time. Now, to conclude, the reason for the FTX downfall would be its FTT token without having a solid foundation to back it up, the use of excessive leverage, and misappropriation of funds. This caused liquidity risk within the company, where there was too much of a debt to assets ratio, which was too high, that caused its insolvency. And as a result, when its downfall happened, the systematic risk that occurred was that the market was too volatile and it eroded too much of the market's value because FTX is such a huge company at that time. You can see the difference between the leadership of Sam Bankman-Fried and John J. Reid III, where under the leadership of Sam Bankman-Fried, there were all these downfalls that were happening. There were too many misappropriation of funds. There were fraudulent activities going on. But when John J. Reid III took over as the CEO of FTX, he exposed all these misappropriation of funds, these fraudulent transactions, and actually established effective governance. Now, although all these recommendations of providing solid foundation, reevaluating collateral strategy, and readjusting the board of directors are a good solution, what I would recommend that was vital for the company's survivability was for the implementation of a capable board of directors, as they could have not only let the company survive, but create value maximization and long-term sustainability as well. That's all I have to say for today. Thank you very much and have a good day.